Good evening, everyone. This is James from Dividend Stock Talk. We talk about dividend stocks and investing for dividend stocks for monthly and weekly cash flow. Today is Tuesday, November 28th. It's 11:43 p.m. Do you know where your children are? Anyway, just kidding. That being said, let's jump on in and see what we're looking at today, because today is Tuesday, but not really necessarily Tuesday for us traders, because if we trade, we're going to end up trading tomorrow, which is Wednesday. So we have 3 days left before options expire. Okay, let's see what we got. This is our dividend capturing account, where we do basically just dividend capturing. Buy the stock before the EX dividend date, capture the dividend, move on to the next stock. Last year we did, I think, around 26% return on this one. This year we're looking at 11% so far, because we have a big, huge loss between SKT and Macy's. Okay, Macy's got a $16,000 loss, and SKT coming in at a $9,000 loss. Now, there's only a loss if we actually take it, because we're actually collecting dividends on those two stocks every 90 days, which is basically when dividends come out. So if you invest for dividends, hey, great, you expect a check every 90 days. If you want to collect more than a check every 90 days, then you're going to need to do a little bit of trading, where you buy the stock, collect the dividend, get out, and jump onto the next one. Because, believe it or not, there's a new stock coming due every single day. Okay, that being said, let's look where we are. Now, we have a little bit of money to play with in this account, so we could buy something. This is basically how I figure out how much I have to trade with here. These numbers right here, they're kind of confusing. Don't really mean very much of anything. I always just put in IBM, and then I try to buy, like, 5,000 shares, which I can't afford, but what it does, whoops, okay, what it does is tell me I don't have enough money to do that. See? And then it tells me how much money I do have. I have 52,000. See that? That's a wonderful thing. All right, so now I can actually go back and actually buy something. Now, this account here, let's go to the calendar and find out who is paying the dividend in the next 10 days. So today is the 28th, so tomorrow would be the 29th. Okay? 82 companies are going EX tomorrow, 124 for Thursday. So what we could literally do is grab any one of these 124 companies. Well, look at Cincinnati Financial. I think that's DuPont, isn't it? No, Dominion Energy. Imagine that. Well, anyway, I go through any one of these companies here, plug it into the software that we created that allows us to find out who, based on past performance, is going to do exactly what we want them to do. How do we do that? Well, here's a little something that they have here on Thinkorswim, but it's missing something. Okay, this is what's called seasonality. Okay, this red line represents 10 years worth of data, kind of what the stock normally does year after year after year. Because let's face it, if you're going to bake, let's say you're going to manufacture cookies. So today you'll do cookies, tomorrow you'll do cookies, the next day you'll do cookies, 10 years from now you're going to do cookies, and it's basically the exact same thing over and over and over again. There's not a lot that can really fluctuate once the business is up and running successfully, because you can't really introduce new products because you bake cookies. Anyway, that being said, 10 years worth of data gives us an idea of what the company normally does on a consistent basis, based on historical performances, otherwise called a seasonality chart. What is the best season for buying and selling a stock? That is right here. If you're looking for a run-up, here it is, between the month of the last week of June and the first 2 weeks of July. Look at that, nice little movement right there. ABX, which is the first one on our list right here. See that? All right, let's go there. Here's ABX. ABX looks as if it goes up at the beginning in the first quarter and then down for the rest of the year. I don't know. Maybe it could be hitting from here, from the last week of December, and go up. And then do the thing down again, up and then down again. Who knows? But looking at this historically, the high time of the year is in the end of February. So January, February, there's a tendency to go up. So do I want to get into this right now? No, not really. Not ABX. ADI. Okay, ADI is a nice clean sweep to the upside, right, starting in October, going all the way through into November. Now, here's where we are now. Now, this is basically going up and sideways. What it looks like, how it performed over the last 10 years. Remember, this is not guaranteed. This is not exactly what it's going to do. This is what it's done for the last 10 years. And they take the data, put one on top of another, on top of another, on top of another. It gives you a good, clean idea of what can or probably should happen in this company. Now, this would be a good one if you just wanted to collect a dividend and then jump back out again, because as you can see, it's going sideways with a slight, ever so slight uptrend to it. Okay. That was ADI. You know what? EAM, or is it AEM? AEM. There we go. Now, AEM looks like she's going sideways for the year. You know, she started out the year at 41.46. Took about a month to find a low at 35. And then it looks like it's like a triple top. Look at that. 51, 50 and a half, 51 and a half. Looks like a triple top right there. But this thing basically looks like it's going sideways. Is this one we want to look into? Maybe. See, not necessarily so. Although she's going sideways, at this time of the year, she has a tendency to go down. And that's not something I want to do. All right, so AGII. Now, I could have done this research a little bit earlier. That would give me an idea of what's going on. Nope. AMNB, AMNB. Okay, that's pretty clear. Going to go sideways in an uptrend. So what does that mean? It means if we buy the stock, what we are, AMB, which is right there, we can collect a 25-cent dividend in a couple of days. Granted, 25 cents is not a lot, but what we want to do, we want to buy it for, let me see if we can do this. More info on MB and trade. There we go. That's right there. All right, she has options available, which is a good thing for those of you who want to trade options. Now, why are options important? Options are important for the reason that if you buy a stock and and the stock goes down, then you end up holding it for a longer period than you want to. What you could do is sell at the money or near the money calls, so giving someone the privilege or the opportunity to buy it from you for the exact same price you paid for it. Now, as you can see right here, the ask price is $40.60. So let's go and buy custom, and we want to figure out how many we can get. So I got to open up my calculator. We're going to look at 52,000 divide. What was the stock price again? $40.60. 40.6 equals 1,280. All right, now if we do 1,280 stocks, shares, let's do that. 1,280 shares. I would just make it even 1,200. Now you have to make sure when you're filling in the numbers down here that they match exactly. Okay, so what it's going to do is first thing in the morning it's going to buy these shares, and then it's going to automatically put my sell order in at the exact same time. Yep, there we go. Now we have enough room to do one more, so let's check out, do another one. Watch A-N-A-B, A-N-A-T, A-N-A-T. Alright, as you can see, this is going sideways with the downtrend for the next. So that's not really what I'm looking for. A-N-F. Now, you might be asking, why aren't I looking for the highest dividends? Now, by doing that, I just click on here, and this is the highest dividends right there, LMT, so on and so forth. Yeah, because it's not necessarily the best value for your dollar. Okay, let's look at LMT. LMT, it's a $300 stock. How many shares of a $300 stock do you actually think you're going to be able to buy? I don't know either. So let's go back here. Okay, ANF. We already looked at ANF. Yep, we said no to that. Okay, so AROW is next. AROW. Okay, this one's going sideways with a slight uptrend for 20 cents. So let's see what we can do with this. You know, before we do that, let's check and see what the actual chart looks like. Okay, so the actual chart doesn't look that bad. Started out the year at 37.99. Took a couple months to find the high of the year at 40. And then from 40, she drops all the way down for like 8 months to find the low at 29. Goes sideways for a little bit in the $31 area, and then jumps up and gets into a channel which is right around the $34 area, and goes sideways for quite a bit. And she's in an uptrend at the moment, but she does have the dividend coming out on Thursday. You know, the EX date is Thursday, so tomorrow is the actual last day you can jump in and take advantage of that. So let's see what they are offering. AROW, right click, and it goes more info on AROW, slide on over, come up to the trade. There she is. Okay, so 36.95 is the point that we're looking for. Let's go there. All right. $36.95, and that's going to equal 1,900 shares. Okay, so 1,900 shares. You know what's nice about that is if we don't reach our limit, we can always collect 1,900. Ooh, wait a second. 28 is 50. That's not right. That should have been 56,000. Yo. So let's take a look at what we're doing. All right, we're taking that, and then let's just do 1,400 shares, see how that looks. Okay. Right, click buy custom, there we go. 1,400 shares. 1,400 shares. See what that looks like. Alright, there you go. So we have our 2 orders in for tomorrow. Okay, AROW and AMNB. Now this is just to collect the dividend, jump out and sell it for the exact same price that we paid for it. So whatever we buy it for in the morning, the computer is going to automatically sell it for just a tiny bit more than what we paid for it. But we want to be able to hold it for 2 or 3 days so that we hold it into what is called the date of record. That way, we become the registered owner of the stock, and we can able to actually collect the dividends. All right, so what I'm going to do is I'm going to jump out of here and jump into our options account. Our options account is pretty crazy, only because we actually might hit triple digits for the year with this account. Now, what do I mean by that? All right, now we trade 4 different accounts. There's the dividend capturing, which we buy the stock, collect the dividend, sell it for the same price that we paid for or a little bit more. And we try to do that to collect 10 to 20 checks per month of the dividend checks and try to turn over our money as fast as possible. But worst case scenario, if we find out that the stock goes down, be able to hold on to the stock and collect the dividend, and then we collect dividend after dividend after dividend after dividend. And instead of getting a 2 or 3% return on your money, you end up getting anywhere between 10 to 20% return on your money. And it's still safe because these are companies you'll be buying anyway. Instead of diversing all your money into all these stocks, you're just buying 1 or 2 at the moment. It hits your target, you get out and you buy the next one. I mean, they're high quality stocks. Increase their dividend payments to their investors every year for a minimum of 25 years. That is key, because what they're going to do next year, more than likely, they're going to increase their dividend payments again. And then the year after that, they're probably going to increase their dividends again. But there's no guarantee. However, there is the guarantee that you will be getting a return on your money from your investment in the form of a dividend check. Whether or not it's going to increase next year, I honestly couldn't tell you, But when a company has gotten themselves to a certain point, let's say like a Dividend King, where you need to increase your dividend payments every year for a minimum of 50 years in order to stay on that list. So to stay on that list, you have to increase your dividends and your investors get more and more money, which means it's a solid investment. So why not buy that stock, grab that dividend, get on to the next Dividend King, or get on to the next stock that's going to give you a lot of money. Anyway, that being said, it looks like we'll actually be hitting triple digits this year with the options. Now, options are more risky than just the stocks, but no risk, no reward. Low risk, low reward. High risk, high reward. So I can't tell you what to do with your money. I'm not going to tell you to put it all into options because that would be kind of foolish. Now, there's a balance, and you're going to have to figure out the balance for yourself. Do I put half my money into dividends and just collect, 10 to 20% return, put the other half into options, which can get me, 30 to 40% returns. And then you combine the two together, you're looking at 25 to 30% returns. But you have to remember, more risk, more reward. You want safe? Put your money in a CD. Bank will give you 1%. Up to you. You do what you want. I just give you suggestions and I'll show you what I would do. All right. That being said, let's move out and find out who's going to be paying their dividends in the next 10 days. All right, so today's the 29th. So 5 days from today is the 6th. 10 days from today is the 13th. Okay, so let's clear the field. Okay, so we have 8 companies so far for Monday, 14 for Tuesday, 12 for Wednesday, 123 companies for Thursday, December 14th, and then 11 for the 15th. Okay, but look at that number there, 123. How are you going to possibly go through all of those companies to try to figure out which is the best? I don't know. Can't figure it out. Sorry. So what I'm going to do is, considering we like to trade options and we like to trade weekly options because it gives us more power and more opportunity to turn over our money a lot quicker. So I click on this little icon right here, little gear shift. I right click on that. Oh, or do I left click? I left click on it. Sorry. Left click in it. Click on it. Come down here. It says public N3W. Slide over to the other drop down menu and I come down to the weeklies. And this tells me all the companies that have weekly options available. Nothing for Monday, but look at this. Tuesday, it's got 3. APC, HPE, and HPQ. Let's see who they are. Oops. HP, it's got to be Hewlett Packard. Okay, HPE. All right, HP is Hewlett Packard. So who's HPQ? That's a good question. Anyway, HPQ, Hewlett Packard, and APC. Anadarko Petroleum. It's an oil company. They're paying on a 5-cent dividend. Let's take a look at what we're looking at. All right, so APC. APC. All right, they're at 47.77 right now. They started out the year right around 61. It took a couple of weeks to get to the high of the year of 73. It traded in the 70 area for a good 2 months and slowly trickled down. Stopped off at 61 for about a month and a half. Came back down 52 for about a month. And slowly found its way to the low of the year, 39.90. Wow. And then from 39.9 she bounces off and settles into a $48 trading range, which is where she is now. Now, they got the dividend coming up in 10 days. Unlike the other account that we traded a few minutes ago, this one doesn't pay out its dividend or go EX for another 10 days. So that gives us 10 days for it to move the movements that we want to make. Now, this is all fine and dandy. You know, the 1-year chart looks great, but what does this thing do normally on a 10-year basis? You know, over the last 10 years. Okay, here's where we are. And this, my friends, is clearly a down movement. So this is something I want to invest my money in? No. All right, let's go jump into the next one. HPE, which is Hewlett Packard. I figured HP was Hewlett Packard. But anyway, okay. Now, Hewlett Packard, that's a definite yes, because look at that. She just goes up. That's lovely. All right. Let's see what she looks like. Normal chart. All right, all over the place. Trading range between 12 and 14. Wow, that's a sideways going company if I ever see one. Started out the year at 13. Look at this. This is what you call a channel trading stock. It's like if you stick between, here we go, hit all the tops. 14.25 and 13. So you buy it at 13, sell it at 14. Buy it at 13, sell it at 14. How many times could you have done that? Okay, so you short it at 14, buy it at 13, right there. See that? And then sell it at 14, buy it at 13, sell it at 14. So that's what. Okay, let's count it out. Okay, so we're gonna take it 13 and 14, just that dollar spread. Watch this. Okay, so 14 is there. All right, that's one. That's 2 trades. That's 3. That's 4. That's 5. That's 6. Oh, just missed it there. See, you would have missed it there because if you're going to stick to a plan at 13.04, it doesn't hit the 13 mark. So it means you missed this move and you missed that move. So you wait for the next one, which is right here. Okay? Then I forgot, I lost count. There's another one. Here you go again. Here you go again. Right there. And do you hit that one? Yep, you catch that one. And do you catch this one right? Yep. And do you catch this one? No. All right, anyway, so that is like awesome channeling stock between 13 and 14. So next time she hits 14, you want to sell. Next time she drops down 13, buy 13. Okay, anyway, this is where we are. Okay, 14.88, and what's she going to do? Yes, we already decided we're going to do that one. Okay, so let's trade this one. More HPE. Trade. We don't want to go 10 days from now. We want to go 3 days. What can we get in 3 days off of this bad boy? All right, I'm going to look at the 1350. Because see what it is? 1388, 1350, which would be right here. 50 cents. They're not giving us anything to play with. Huh. All right, you know what? I'm going to put an order in for a 25% return, which would be, 40 cents. It might get filled, it might not. All right. All right. So the maximum profit we can make is 500 bucks. And how much is it going to cost us? It's going to cost us around $2,081. That's right around 25% return for 3 days. I think that's pretty good. It's a safe bet. $13.50. Is it going to fill? I don't know, because she wakes up in the morning. She closed yesterday at $13.88, so the market maker's looking at between $13.30 and $14.15. So it could fill, it could not fill. I don't know. We will find out tomorrow. All right, so that one's off to the races, and let's look at who's next. HPQ. We're going to do this one, last one, and then we're out of here. HPQ. All right. HPQ looks good for the end of the year because it's basically all sideways with a tiny bit of an uptrend. So that makes me happy camper, because what I like to trade makes me money whether it goes up, down, or sideways. All right. So HPQ starts out the year at 15, goes sideways for 2.5 months, jumps up to a trading range of 17.50, trades there for a month and a half, jumps up again to a trading range of just below 19.50, stays there for a couple of bits, that's like 5 or 6 months, and then she moves on up to a trading range of 21, which is where she is today. She gapped down from the high of 22.68. She traded out all the way down to 21. Why did the market maker do that? I honestly don't know. But 10 days, they're going to be going EX. And Hewlett Packard, it's a well-known company. It's a company you wouldn't mind holding for a few years. So we're going to jump into this one and see what they're offering. I say that because I have no idea what they're offering until I actually get there. Okay, the stock closed at 21.66, so we're looking to be at 21.50, which is right here. She wants 44 cents. I'm going to say no. I want to drop it down to 40, which is another 25% return. Is it going to open up for what I wanted? I don't know. Look at the spread on this one. 21.55, 21.65. It's only a 10-cent difference. Okay. However, if I'm going to be doing the risk, I want the reward. 25% is a nice reward for a 3-day spread. That one's off to the races. Okay, I can make a, oops, no. That's not worth my while, because we're trying to make $1,000 a week, which is a 1% week. Okay, this is 500 bucks. And it's going to cost me $2,081, which is a 25% return. Okay, so there you go. That's our 2 trades today, and tomorrow we're going to do a couple more trades. I probably should do some more, but I want to keep these videos short, because if I go too long, people get a little bit antsy and they want to watch the whole thing. All right, that being said, this is James. I'm going to check and see if I have any questions. I don't know. Questions. No questions. Lovely. All right, so this is James from the Dividend Stock Talk. I'm out of here. I will catch you guys tomorrow just to maybe put a couple more trades in for the last 2 days of the week. All right, out of here. Have a great day. I'll talk to you guys later.